We've got the NASDAQ and S&P flat. Dow Jones is actually down a little bit this morning. I'm wondering why that might be. Let's think UNH, some of the big Dow components. There it is. We found it on the first try. UNH is down this morning, which is a big healthcare, United Health Group Incorporated Health Services, healthcare company, down 9% this morning. And this is a big weight on the Dow Jones. And so the Dow Jones being down here is, of course, being dragged down by specifically UNH. We could also look at like some of the other big Dow names, Caterpillar, Apple. Apple's up in the pre-market, so no worries on Apple. NASDAQ is up a little bit here this morning. S&P 500 flat on the day. The dollar index is just mildly lower. Chinese stocks are down a little bit, and oil is down. I'm definitely stopped out of this position. In fact, I need to send out a notification here really quick. I'm going to go to commodities trades. This one did not work out for me. Oil started out so strong, stopped out on US oil. This one started out so strong for me, looked really good, but then we had some news yesterday from OPEC, which definitely did not play out in my favor. So you can actually see the entry was over here, started out beautifully, completely came down, taking a full loss here on the jaw this morning. And the reason is that OPEC came out and they increased supply expectations for selling. So check this out. Oil prices fall as Israel said to restrain its response to Iran's attack, while the IEA lowers its demand forecast. Okay, so I said that wrong. I don't know that it's about OPEC. There's perhaps some positive news in the Middle East to a degree, but also IEA lowering its demand forecast is going to have an impact. So oil taking a bit of a nosedive here this morning. I'm going to go ahead and stop out of that, and it didn't do what I thought. It put in a lower high, so oil is off the table for me at this time. So there is one positive here, though. Falling oil prices is good for inflation. Remember that lower or higher oil prices do have pretty significant impact on inflation, because when oil prices are higher, like they were in 2022, we saw that be a really big theme of 2022 with Russia's invasion of Ukraine. As we saw that play out, oil prices skyrocketed up to $120 per barrel. And that really triggered a lot of the inflation, or it definitely did not help the inflation situation that we saw in the US and Europe, UK. Many places experienced high levels of inflation due to the rising costs of energy, largely attributed to the war in the Eastern Europe, Ukraine situation. That being said, oil supplies have been increased pretty significantly. The U.S. creating much more oil, other places creating much more oil to sort of combat that. And we do see oil prices now trading around 70.8 per barrel. So that being said, oil prices coming down are helpful to the inflation story. When oil prices are rising, everything sort of rises in price. When everything is, when inflation is, when oil is falling, inflation can potentially cool off and prices won't go down, but they won't go up as quickly. And that is one key thing you have to remember about inflation. Even if inflation goes down, it doesn't mean prices go down. It just means prices go up slower, which I know everybody would like prices to go down. Unfortunately, the only way you get prices going down, historically speaking, is usually when you have a big recession and lots of people losing their jobs and people can't pay for anything. That's usually when prices go down. So prices probably won't go down in terms of if you're waiting on the sidelines for, home prices to go down or grocery store prices to come back down. Unfortunately for all of us, those prices are probably not coming down unless you enter into a big recession, and most people will lose a lot of jobs in that situation, which is not something you want to trade, right? You don't really want to trade lower prices for no job. It's not great. Look at that. This has been one that I've wanted a pullback on it for a while, and there's just been nothing. No pullbacks for dollar CAD. Just been a straight shot here. Really strong price action. Euro dollar is another one I've been looking for a pullback on. I'd like to see if I can get like this retest of support turned resistance. I like that for a continuation play on the euro dollar. But we'll see. If we come back up into that 38.2%, I like that for a possible sell on the euro, as long as the edge finder is still confirming it at that time. Let's go look. Are we getting euro? Yeah, we are. Euro dollar bearish readings are still intact here. So if we get a pullback on the euro, that might be a setup for me. You know, this edge finder thing is pretty cool. I can trade it all sorts of different ways. And for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the edge finder can be scary. The edge finder keeps you up to date with all the most important market moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the edge finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
Anyways, let's take a look. So in terms of setups currently, we got euro dollar bearish setups, euro pound. I like that. Kiwi Swiss, euro Swiss, Kiwi dollar. On the bullish side, we still got the Dow Jones, NASDAQ, Bitcoin, Nikkei, SPX, pound Aussie, USD CAD. And I'm specifically mentioning the ones that I trade the most. I actually don't usually trade minor currency pairs. So if I take that out of the equation, is the edge finder going to crash out on me for that? If I take out minor currency pairs, I'm left with just, there you go. These are basically my current watch list setups. Euro dollar looks really good on the short side. Bitcoin looks really good. Did you guys see Bitcoin? I put something in the Telegram. If you're not in the Telegram, by the way, join it for free. I want to show you guys something. I dropped this chart this morning in our Telegram channel. Look at this. So Bitcoin looking like it may want to break out of this range. I called this out in our Telegram channel. If you're not in there, we'll drop the link. You can join it for free. There is the link right there. So yeah, is Bitcoin going to do the thing? It's been stuck in this range for so long, and we finally started to see last few days a nice push to the upside. I sold puts on Bitcoin through the ETF BITO. I can show you that really quick. Let's go to positions right here. I know it's a little hard to see on the screen. I sold Bitcoin puts through BITO, and that is going to probably be looking decent today with BITO probably jumping up. Yeah, Bitcoin ETF here. So I sold puts down here, and of course price going up means that those puts become less valuable. And because I shorted the puts, I shorted 10 contracts, we have a max profit potential of like $650 or so, $660. So we'll see if that can catch a little bit of a bid there, but Bitcoin looks good. I actually really like the idea of a possible trade setup on Bitcoin, more on the active side, even like a momentum trade. So what I'd be looking for here would be this level to actually like break out and become support. So if we get something like this, if we get something like this, a big break through these highs and really clear this downward trend that we're in, I love that setup. I think that you're still in sort of risk on territory with the stock market. So if you get something like this, you get like a 38.2% retracement. I love this setup quite a bit. But I've been waiting on this channel to break for some time. And so we're finally looking like we might actually see it. I already do have a Bitcoin position, but I'd be willing to add like a momentum trade with a stop on it. If you get something like this, looking for continuations, stops would probably go below structure. Just look for an opportunity to trail stops and see if we can catch a runner. Gold is flat on the day, still stuck between this range. And on the 4-hour chart, I don't love the chart for gold here. Dollar index, daily chart for gold, still showing some pretty strong support. I'd be interested to see if we can break through those highs, if that could get us to sort of just continue the trend that we've seen that's been pretty dominant this year. On the bearish side, if you start seeing a break of this trend line and this break of support here, then you might start seeing a bigger correction or pullback in gold. I'm not betting that that's going to happen, but if you are a bear on gold, if you're looking for bearish setups, my opinion is I'd wait for this. I'd wait for some breakout proof of concept here that's actually going to reverse before trying to call the top. So, terms of setups, like I said, I really like Bitcoin. I'm already in a NASDAQ bullish position. The Dow Jones is another position I'd be interested in if you get a nice pullback there. S&P 500 looking strong. Nikkei, dollar CAD is one, but it's gone so far that I have to wait for a pullback. And Euro USD is the same thing.
So, what I'm looking at the moment, I'm looking for continuation on the yen pairs, and I'm kind of getting a pullback. I'm kind of getting, at least some better pricing. I saw this morning it was falling, and like, yoo, great. That is what I want to see. Other than that, we are a bit higher than currently, but as I'm going through, as I'm showing you, what is currently happening is probably pound yen, euro yen, and like Aussie yen are kind of situation we should look into. Now, the only problem is on Thursday we have the ECB, and that's going to send euro lower or so. It is what it is, I guess. So I just have to wait for that one to kind of come along and figure itself out. Yen man, how? What do you mean? Because I always trade yen. I do yen, and me and Wita we're best friends. We have call every time. When he's about to do something, I'm on the right side of things. Every time he does something out of the ordinary, Mark is like, "Whoa, what's going on?" I'm like, "Hey, I told you." UJ might make goal. Do you still remember, Ivan, why the Fed would not cut rates if dynamics are strong? You said it will cut. Can you explain? I might be wrong. The Fed posting said they might hold in November. Yeah, so you have a couple of very bad. You have very strong economics in the United States at the moment. So it's just that inflation keeps everything for a rate cut. So if I remember correctly, if you look at growth, if you look at GDP growth, I believe that is about 3%, yeah? If you look at labor market, NFP, that one came at 254, which is a very good number. And if you go to inflation data, CPI year over year, it's about, I think it was 2.5 or so. That is 2.4. Okay, fair enough. So the major data is telling you we're actually not in a horrible place. And inflation has come down, and it's kind of the only one. If you look at ISM, you have now the highest PMI for the past, 1 year or so. So you are maybe in a position where the manufacturing, which is a bit less important, is a bit less. But my point is, we are generally too strong for massive rate cuts. Now, the question is, are we going to do a rate cut in November or not? That's kind of, it's tricky, if you ever married, and if you ever have a sister, are you going to tell her that she has food on her face? Because if you do, she'll be angry at you, and if you don't, she'll be angry at you. You know, catch quite thrown into kind of situation. So no matter what you do, you're always going to be wrong. That's kind of the Fed at the moment. So if they cut, that might refuel the inflation, and then you have oil on the other side, which was at 77. And I was right; it was going to fall again below what it was earlier. Woohoo! Great. But that is going to lead to inflation in the CPI next month. So, if it was going to be up there, so it's the data is conflicting. That's why. So you can do both. So somebody asked for pound New Zealand, and I actually want to go there because I just want to be done with that question, because I want to sell it. Okay, I want to buy New Zealand, which your New Zealand almost came on Friday to my entry. It didn't. And New Zealand CAD, it almost came to my entry, but it didn't. And now we have higher highs. So, and then I wasn't on the chart yesterday, as I could have bought there probably, but you know, I'm expecting this one to continue until mid-December, I believe. So I was about to get an entry here. And that means also, if pound New Zealand, for whatever the reason might be, makes a lower low, I'll continue. I'll look for a short on it. All right. Now, well, you know, okay, we have different opinions. That's totally all right. And I believe that UJ is going to go up, so that's kind of the other one, because I think yen is so weak. I know the trend is high, but yeah, cool, great. Lost a couple of money on trading yen pairs. I hate that pair at the moment. Kyrianax Cosmos. You know, love some deep hot relationship advice I probably give you to your yen. It's gonna be a hate and love relationship, but it's gonna be worth it in the end. You know, you have to push through, you have to talk, you have to be open about your feelings with yen, and you have to come to a common understanding of when to be hot, when to be cold, when to be passive, when to be aggressive. You know, it's not a one-day affair. You know, it's a continuous relationship for quite a long. And when you have been hurt before, you have to come forward to her and say, you know, I feel this and this way, and I feel hurt by this and this way. So, you know, I think you have to speak to Yen. You have to lay out your emotions, and then you're gonna an apology, and then move on. Wow, your commentary is unique. Thank you. You're welcome. But why does the Elfine just say buy? Now, where I am, and what I just mentioned, Emiliano, is if pound New Zealand, for whatever reason, goes lower, meaning all the odds is higher. So if Edgefinder is higher, then you probably should look for a buy. All right, cool. Not financial advice whatsoever. But I said if it continues lower, it'll be a New Zealand strength, and probably more than anything else. If you're looking at any New Zealand, I'm like, cool. Whenever New Zealand dollar, US dollar makes a higher high and starts trending, I'd be like, kapoo! I'll probably take that one instead of pound New Zealand. It's the worst one. And only when New Zealand is weak should I be looking to buy pound New Zealand. So I'm expecting New Zealand bullishness. So I'll probably not buy it. Pound New Zealand, strong and strong, but you know, it is what it is, right?
We got some activity to jump into today. Pretty interested in a couple of positions here, so you're in the right place. I'm going to start adding some exposure. We do have an earnings play on Snapchat. This has been kind of an oldie but a goodie. An app that has millions and millions of users. Let me take a look at this fundamentally here. So let's go look at the snowflake analysis on Snapchat. We have earnings at the end of the month. Let's have a look. So Snapchat here. So I don't love this. Unprofitable, not looking to become profitable, insider selling, shareholders been diluted, trading well below estimated value, earnings forecasted to grow. I mean, I don't know how Snapchat is monetizing or needs to monetize. They're clearly lacking in that department compared to, I suppose an Instagram, which is owned by Meta, or even a, Twitter, which is now private. So let's just take a look at a couple other things. Price to sales, price to earnings. It's fairly cheap. Fair value shows here discounted cash flow model getting up to $24. 1105 is not bad. Peer average is 6.1 and Snap's 3.7 price to sales. So the risk that I see is this is not good. Insider selling, which I don't necessarily love, but if we go back to this stock where we IPO'd back in 2017, we were as low as 472 or 490 back in 2018. We had a COVID crash low right around $8.27. We're trading at 1101. The only reason I really like this trade for just a pure speculation is we've got a gap fill at 1274. We've got previous highs that have been tested multiple times here in the last year or so. So here's December 2023. Here's several times this year in 2024 through the summer. That's up to, $15, $16. We have another huge gap up here in the 20s. So I'm considering getting some shares of it now and letting them run as is. I want to see if I bought a put to protect myself through earnings and through any type of election volatility. Is there a chance to lower my cost basis or at least protect the trade? So choices, right? If I buy the shares, then I have essentially 100 delta, which means if price goes up by, $1, I get $1 share in profit. If price pops up here, to 1250 and change, I'm just looking at a couple percentage moves. If we pop up here, that's a 15% move. If we get back to these range highs, that's a 50+% move. We get to fill this gap, that's a 90+% move. Not saying it's going to happen, but technically speaking, we've had some really strong support back into late 2022. So as long as I can kind of protect myself to the downside, and maybe lower my costs into the, $9 zone, $8 zone, that would be good for any type of negative price action that we have in the next maybe 2 months. But if we have upside, I'm trying not to cap that upside too quickly. All right. So let me have a look here. Company earnings, that is Option Slam. Option Slam is where I price this stuff out. So if we look at Snapchat, for example, and earnings is coming up on the 29th of this month. So you can see here percentage-wise, these are pretty big. 30%, 34%, 35%, 23, 26, 21, 17, 22, 24. We got 26 points. I'll just say 25% is the average move. Obviously, the stock's not super expensive, so we've got a $10.98 stock at a 25% average move. You're looking at about 274 average for an earnings report. Now, how many times do we hit 25% over the course of earnings? Well, let's do the math. Let's go out to about 8 days. Use a black line here. Let's go 8 days out. How many times do we hit 25%? This took 1 day, so that did. Day of earnings. This one did not. This one did not. This one gets to 21, but not enough, so that one does not. This one does not. This one does. This one does, and this one does not. So again, in typical earnings fashion, we have 5 that do and 5 that don't. So does that mean this is a great trade? Not really. Is this something as far as a tech or, I do know that Snapchat has a massive user base. How they have failed to capitalize on monetizing it is beyond me, but I don't know. To my knowledge, I think most of the younger demographics communicate a lot on Snapchat. And I my 2 nephews, I talk to them a lot on Snapchat. So anyway, I'm not saying that's the reason I want to buy the stock, but it is cheap enough. We've had some pretty good structure here around these like late 2022 support zones that I want to take a look and see, okay, if I buy it here, upside is immediately at $12.85 or, all the way up towards like $16 or $17. I'd be pretty happy if I did that. Let me see what this looks like. I don't really want to get it covered, but I think I want to get it protected. I might collar this thing, but not going out super far. So let me have a look at this right here. Also, if interested, I put in a butterfly spread on the SPY this week. I'll put that in. So I'll explain this trade. This is the SPY. I sold a 590 call, and I sold 2 of them. And then I bought a 593 and a 587. I created this butterfly spread. It looks like this. So price is right here in the middle. Price is right here. If price goes higher for the week, the butterfly spread looks like this. So I take this small risk of about 45 cents. Okay. And if price is drifting higher for the week and it gets up into my profit trap, I can turn this 45-cent debit into probably a, maybe a 25-cent credit. They'd be roughly a 50% take profit. Okay, not too bad. If I turn that 45-cent debit into there's a max profit here of about $2.50. So that's roughly a 6-to-1. If I get this thing nailed on Friday by, expiration or close to expiration of his trading near 590, that's a good way to make, pretty nice return. So I'm just setting a call fly out for the week, and I'll see what price does. But I'm going to keep this where it's like, I'll let price go for the week. And if it gets a chance to hit up to 589 or 590 or 591 by the end of this week, that should turn this into some profit. So I'll keep an eye on that one. So far the day's been pretty quiet. Let's go to Snap. So Snapchat right here, we've got earnings on the 29th. We've got the election on the 5th. We got an expiration on the 8th. If I went out to the monthly expiration, let me see one thing here. So if I buy some protection, so let's say I buy the shares, okay? If I buy the shares and against that I buy like a $9 put or an $8 put, it would be really cheap. So if I buy this put at $8, it's going to cost me 20 cents. So let's say that I buy the shares at 11.07, right? Now, if I buy them at 11.07 and price jumps up to 12.50 or let's say $14, that would be roughly the expected move over that period. You got a $2 expected move. I'm only paying 20 cents for protection. Okay, so if price moves greater than 20 cents, I cover the cost of my put and I'm sitting in profit. Right? I'm using the put in case the earnings print is lower and this goes from a 20-cent debit into maybe a 40-cent credit, 50-cent credit, 60-cent credit, and then I can lower my cost basis a little bit further. The reason I don't want to cover this right now is if I buy it at 11.09 and I cover it immediately at, let's say, $13 or $14, that's credit that I collect and that does lower my cost basis, but now I'm going to have to wait for the expiration in order to get the stock called away. And I don't really want to go out that far. If this stock has more upside or during earnings on the 29th, I don't want to have to wait to the 15th. But on my long side, if I buy a put to protect it, I'm probably going to go ahead and keep that time out there a little bit further. So here's what I'm going to do. I'm going to buy some shares right now at $11. It's $11.09. I'm going to buy some shares. I think I'm going to buy 500 to 1,000 shares. So if I buy this times 11.09, I'm looking at allocating about 55.45 in cash. Margin account, you're talking about 27.72 in margin, which I've got plenty of buying power on all these accounts to do that. I've got some cash accounts here. So I think my cash accounts will do 500 shares. My margin accounts will do 1,000 shares. And I think that's going to work. So here's the play. I'm going to go 11.07 or 11.08 for the long shares. So I'll just go in my broker platform, go long stock, buy it at 11.08, and then I'm going to buy the $8 put, which is going to cost me about 19 to 20 cents debit, and then do that out to November 15th as a downside protection. So anything from current price up 20 plus cents covers the cost of my debit. Anything up to $12, $12.50, $13, I'll probably end up taking some profit on the trade. Okay. So, I'd like to see if Snapchat can go up into the, $13 zone. Let's get up into maybe $16 or $17. So I do like the trade. All right, let's get this going. So I'm going to go 500 shares for, there's 1, there is 2, 3, 4. So 4 accounts for 500 shares and then 4 accounts at 1,000 shares, and then work the numbers, add my protective put at $8. All right, everybody follow me? So I'll get this all posted and updated in the A1 trading community for my Chris Pulver trade alerts.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.